Oh, you got the beverage.
I got the beverage cracked. What's up, ladies and gentlemen? It's not a fun beverage, but it's Sprite Zero. Keeping it low sugar tonight. How's everyone doing? Welcome into the live show. Chaz with Side Hustle Network here. And we are going to be going live with Mr. Mark Tew of Not Your Dad CPA. I'm definitely pumped to be able to. Is that my end? Okay. I'm like, hey, I did this last week. So I'm like, crap, did I just mess it up again? So we're going to be going live talking about everything taxes and reselling. I think the e-commerce space is definitely a tough one to wrap your head around with the taxes. Most people, including myself in the beginning, we were used to just being a regular employee at a regular job, which means you get your W-2. And then it's a simple, like I used TurboTax back in the day when it was just a simple, like, all right, input this information from this box and then boom, I get a refund. And then you can turn self-employed and the refunds get smaller and smaller and then you don't get them anymore. But so we want to bring the professional on to share with you guys the ins and outs. And we'll talk about everything from the basic question of sole proprietor. What's that even mean? When should you switch to an LLC? How does the tax end work? We're going to cover all that for you guys tonight. And Mark is actually my CPA. This isn't just a random one we picked off the internet, right? So personally, Mark has walked me through the ins and outs of our own business, which a little bit more complex now that we added in a second company, which has a partner. So we had to structure it a little differently. But fortunately for me, Mark knows his stuff because I do not enjoy the tax side any more than anyone else. So Mark, you want to introduce yourself, kind of a little bit about your background. And he's a seller, by the way, himself, which huge bonus. So he understands all the craziness we deal with.
Yeah. So, I mean, that's pretty much it. I'm a CPA. I specialize in e-commerce, do a lot of tax planning, tax preparation. And I sell online. I do Amazon FBA. I mean, with my CPA business, that's really the one that makes the most sense for me just because it takes the least amount of time as far as I know. But happy to be here. Next time I do this, I got to make sure I have a camera like you guys. I got to upgrade because that
dude, super easy. Get a Canon. I guess you could do it with any of them, but get a Canon. I never wanted to mess around with like the HDMI capture card and all that kind of stuff, external outputs and all that. And so I never did it. Now I got a Canon M50, pretty cheap camera as far as SLR goes. And so what you do is you literally just download the Canon utility app and just plug it into your USB, connect it to the camera.
Really? Well,
and then it has this.
I have a Canon now that I use for YouTube, and I'm like, I didn't know I could plug that in.
Canon utility webcam app. Just Google that, take you to the website, walk you through it. Then it's just literally plug it into your computer, and then you install the driver, and then from there it's just get lights hitting you at different angles, and then pop. People are like, "Oh my gosh, it's professional!" It's kind of a sit.
Yeah, we're doing technology and taxes tonight.
Hey, there you go. There's your tip for the night for the tech side. So it's going to be open conversation, by the way, for you guys too. So in the comment section below, whether you're watching one of our Facebook groups, which we are streaming to both our eBay and our Amazon FBA Facebook groups and on YouTube. So comment below questions about taxes, all the fun stuff that nobody ever answers in Facebook groups for you. This guy can do it because he's actually a CPA. I refuse to answer tax questions. And I'm like, here's Mark's information. So I guess we'll start with the basics. Number one question I think I get about people just starting is sole proprietor. What's it mean? Should I start an LLC right out of the gate? And of course there's different ways to do it. What's your personal take on someone just starting out and what kind of structure they should look at?
Yeah. I got to first say, I appreciate and I understand the Teenage Mutant Ninja Turtles reference in the comments. Love it. Never pay full price for late pizza.
So great.
Okay. Yeah. You're a sole proprietor by default. So a lot of people they put off selling, they put off getting started because they're not sure like what they have to register as, but really you're a sole proprietor by default. Even if you don't register anywhere, the IRS is going to consider you to be a sole proprietor, and that's fine. That's what a lot of people are throughout their whole business career. There might come a time where something else is more advantageous. but there's no rush. Usually the next step is going to be an LLC, but there's typically no rush on day one to have to run out and do that.
And I can tell you from firsthand, and throughout this conversation too, like I'll give you guys some inside sneak peek on like what we've done over the years. I ran sole proprietor pretty much up until, what was it, a year and a half ago or something like that. We kind of started transitioning over to S Corp, LLC, and then that's taxed as an S Corp, which we can dive into that in benefits. So there's nothing wrong with sole proprietor. It gets to a point where when you want to separate yourself from the business, if for some reason you ever got sued, especially in Amazon world, who knows what can happen, then having that true LLC, if it's run like an LLC, then that separates that liability for you. And then, of course, getting into S Corp, there's a bunch of different tax benefits. In fact, Mark set us up as an S Corp last year, 2019. That saved us like $15,000.
20.
Was it 20? See,
2020.
2020. Okay,
And
that's right.
We could say the savings was 20. Who knows? Probably was.
Yeah. So I remember looking at the final compared to the year before, and it was like $15,000 less because of structuring it as the S Corp model. That's all stuff that Mark knows how to do the ins and outs. And if no matter who you go with, you should be consulting with a CPA, especially once you get to the larger sales numbers and profits. If you have business partners, if you're taking investors, that kind of stuff, I would definitely consult with a CPA and all those ins and outs there. All right. Is this thing on? Yes, it is on. Good to go. Will this live stream be available later for a playback? Absolutely. This will be pretty much in all the different Facebook groups and the YouTube channel that we're streaming in here right now. So do you want to walk through kind of the common questions that you get? I'm sure, especially on Instagram, you get hit up all the time with these questions. Some of the ones that maybe seem like common sense, but there's different answers to each one.
Yeah. Let me I actually have a list somewhere of all these questions, but I mean,
imagine the questions you get.
Yeah. I mean, one of the main questions, that's a big one. Like when do I need to become an LLC, or like, when does that make sense? Another one that I seem to get a lot lately is, at what level of sales or profit do I have to file taxes, or is my income taxable? And that one does depend, but typically it's usually going to be on that first dollar of profit. Typically, the exception to that is if you make, if your overall income is less than the standard deduction, which is $12,000 if you're single, or $24,000 or slightly more than that if you're married. But it's not as simple as that. But yeah, just assume that any profit from your reselling is going to be taxable. So, and I have a YouTube video on that as well, but yeah, just assume. And then another one people ask is like, do I have to save my receipts? And I wouldn't stress about it if you're missing a bunch of receipts on like, a bunch of stuff that you bought at Goodwill or whatever. But technically the IRS wants you to have some type of substantiation for every transaction. So, I don't think chances are extremely low anybody is ever going to look at that receipt again. But I mean, that's the rule. So I wouldn't keep the original. I would just scan it, store it in a digital folder somewhere.
Yeah, and if you guys aren't using, there's all kinds of different apps. Shoebox is one that I've used several times. You literally just from your phone, it's an app, take a picture of your receipt, and then it stores it in that iCloud folder. And then you can also get different actual receipt scanners if you physically want to slide it through, like if you're doing RA, especially, or even with OA. The nice part with OA is most of these retailers keep some type of history folder of all of your purchases, and your invoices or packing slips are on there too. So those are kind of the two main things I would keep in mind is you don't have to get the super expensive. Like I sold one time. It was a ScanSnap i500, I think was the model number. Trista found it at Goodwill sealed for $14.99. It sold for like $600 within 2 days. You don't need to get that one. You can get one of the cheaper models, which probably works fine. And then you can use, Evernote, or I think QuickBooks even has their own version of like the actual photo you can take and it uploads there. But keeping those, and then you could just toss them. I was the one, before I found Mark, I had a local CPA here. I was the one that literally showed up with a folder of all my receipts. And after this, he worked with me the first year and kind of, I think he was just being nice. He's like, okay, I'll hold on to that stuff. Come back next week. I'll have it all done. The second year, he's on our first appointment for the consult again. He's like, yeah, just don't bring in the receipts. You're fine. Just take photos of them. You're good.
Yeah, definitely. Yeah. They'll ask me if I need to see their receipts or if they need to bring receipts to their tax preparers. And no, those are for your records only, pretty much.
And the way you can structure it too is, you can organize them. I think a lot of our audience base here is probably like I am, where retail arbitrage, online arbitrage, some wholesale. So if you're doing a lot of RA and OA, I like to organize them by store and by month, which might be a little OCD. But that way, and I do that not for the IRS per se. I do it more so for Amazon. If Amazon comes at me for an IP claim for something I bought from Walmart, I can look at the item and be like, oh, well, I bought that in November. Let me go back to my November folder, Walmart, and then I can find that receipt a little easier and then take that and upload it for Amazon. I would assume same thing with IRS if they ever came after you for something and you need to show proof of purchase. Having it organized by store and or month definitely can save you time down the road. It's probably OCD overkill, but that's the way that I like to structure it with us. Here we go. Adam says, I hope Advil sponsors you, Mark, because taxes make my head hurt and you've made it your job. Thanks for stopping by tonight.
Absolutely.
Yeah, I told Mark his Q4 is basically just starting for the next. When do you, obviously leading up to April, I can imagine kind of crazy. What happens after April 15th? Do you feel it drop off immediately, or is it still kind of busy for you?
For me, it drops off pretty significantly. Yeah, a lot of CPAs will do extensions for their clients so they can have an extra 6 months to file. But I feel like I get most of my stuff done before then, and then it eases up. I mean, last year was different because they extended the tax deadline for everybody. Mm-hmm. So we'll see what happens this year.
Yeah, at this point, it's all kind of up in the air for that. Scott asks, is Mark accepting new clients?
Yeah.
I like the hesitation. He's like, I'm busy, but I could take a few more.
No, yeah.
With the prep center, sometimes I get hit up by people with the prep center side. They're like, hey, are you taking new clients? I'm like, yes, but Trista's going to kill me if I take on another one.
Yeah, no, I'm still taking tax clients. I'm turning people away for like consultations and stuff this time of year. For the most part, new bookkeeping clients, stuff like that. But for taxes, it's all tax right now.
Nice. Do you have a set schedule that you follow? Like, do you have a daily routine? I can imagine with taxes, you're doing kind of the same forms and stuff over and over. Do you have a set schedule that you follow, or do you just look at, hey, I've got to figure out like 5 clients today or whatever, however many you work with?
Yeah, sort of. I mean, it's really just about at my to-do list. I'll try and like write out everything I have to do that day and sort of schedule it out on a schedule. 8 o'clock, 9 o'clock, 10 o'clock, and try to stick to it. I don't always do that. And when I don't do that, I feel like I get behind.
We were just talking about that before we hit live, as Mark and I are the same mentality of, we hate leaving things left just undone by the end of the day. So it's typically where the late nights come from.
But I don't like staying up late. I'm like, once it hits 9:30, I feel my brain stops. I'm like, I got to go to bed. Yeah.
Especially when you're doing taxes. You have no wiggle room for messing up on numbers or anything like that.
Yeah.
Oh, man. This is a really good question. And of course, I'm sure none of us really know, but will we lose the S-Corp benefits with Biden's tax plan?
Oh, that's a good question. I I did study up on that a while ago, but I've pretty much forgot all the things I didn't like about it. But yeah, I mean, there's some. I wish I could talk about those right now, but I don't remember off the top of my head what they were. But yeah, they were looking at getting rid of some things that definitely would negatively affect small business owners. For sure. I don't know if that was one of them. Could have been.
I guess kind of on that same line too is this is one I was going to hit you up about. Anyways, how are people claiming the stimulus checks, different things like that? Obviously, there's different articles floating around. Is that considered income, taxable income, non-taxable? What's the take on all that? I guess same thing too for those that took out like PPP funding, SBA, all that stuff. How are people supposed to take care of that one?
Yeah, so for the most part, it's all non-taxable, but the IRS still wants you to report it all on your tax return, because there's a lot of people who were entitled to stimulus payments who didn't receive them, so for whatever reason. So those people, they're going to report on their tax return that they did not receive anything, and then they'll get a tax credit for the amount of the stimulus. They'll basically get the payment through their tax return. So, and if you did receive it, you'll have to report that too, and then they'll just know that, okay, you're good. You don't get any additional tax credits or anything. So, and that stuff is up in the air a little bit too. The IRS is like putting together tax forms. They actually delayed the e-filing date until mid-February because they're not going to have all their forms ready till then.
Wow. It was the same thing with PPP. They kept pushing back the forgiveness application. And then I haven't followed up in a few weeks, but supposedly in January this month, they were supposed to come out with the easy simplified form. Did they ever drop that? Or is it still kind of just up in the air, coming out with new info?
I don't know. I thought they had, but maybe they haven't, or at least they're planning to. I don't know on that one.
Yeah, it's definitely been a rough year with all that stuff. Let's see. I'm about to move to rental property this month. Will I still be able to claim square footage next year, even on a rental property? I'm assuming they mean they're going to be the renters.
Right. Yeah. Yep, for sure. Yeah. So so that would be part of the home office deduction. If you have a room or a space that you're using exclusively for the business, then you can just take that square footage that you're using. And if that square footage is 10% of your overall rental, you can apply that to your rent, your renter's insurance, utilities, stuff like that. And that'll help you figure or calculate the deduction you get for the home office.
Yeah, that's exactly what we do. We live in a duplex, actually, so we just rent. And we did that we've been in this place for 6 years. Even before e-commerce came into our world, I was a massage therapist and I built out a legit home studio. It looked like a mini spa in that room. And so I was able to write off that section of the square footage based on how much we paid on the rent, some of the utilities that went into it. And then little things before I met Mark, but my CPA back then had brought up, he's like, well, you're washing those sheets, aren't you? So laundry detergent, the water, obviously for the laundry. So just little stuff like that, the deductions a lot of people miss out on. Anything you touch around your home, if you're legitimately using your home for business, anything you touch related to the business, you can write off a chunk of that. Of course, consult your CPA, consult with Mark. They can give you the logistics on that. Are there common overlooked deductions you think most sellers, especially those working out of their home, are missing out on? I think a big one people forget about, even though it seems like common sense. I didn't know this in the beginning, but mileage. I think a lot of people are missing out on the true mileage, because every time you go into your car to go source, you should be tracking those miles. Those are business miles right there. And is it 58 cents a mile? That changes every year. I think it's 50-ish.
Yeah, for 2020, it's 57.5 cents. I'm pretty sure.
So definitely log those miles. I always love the question too. What about the wear and tear on your car, bro? Some of my retail arbitrage videos have gotten popular. And so they see me hustling Walmart. So like, oh, sure, you made some profit, but what about the wear and tear on your car, bro? I can write off over 50 cents a mile. I'm good. That far outweighs the maybe $1,000 a year I have to put into my car for actual repairs.
Yeah. I mean, and that's what, that's what they take that into consideration in the rate that they set. That's part of 7.5 cents.
Yeah. Because you can do mileage or gas and repairs, correct?
Right. Yeah. Mileage or actual expenses.
Okay. And I'm assuming the IRS doesn't want you to flip flop. So if all of a sudden I'm like, oh, I had to put a new engine in my car this year, I'm just going to write off the expenses portion, not mileage. Are you allowed to flip flop, or do they like to see you stay on one path?
Yeah, I think the rule is that if in the first year you use the actual expenses method, you have to stick with it. But if in the first year you use the mileage method, then you can switch back and forth. Which is kind of weird, but
it's not worth putting a new engine in my little car, but it's good to know for the future. This is a solid question. And this is why I originally needed to reach out to Mark to begin with. Multiple gigs considered income. So this gets into how do you deal with multiple streams of income, especially for some of our audience that maybe they do DoorDash part-time, they sell on eBay part-time, they sell on Amazon, they have all these different income streams. Is there a different way they should be structuring, whether it's S Corp, LLC, sole proprietor, multiple bank accounts, single bank account? What's your recommendation for that?
Yeah, it just depends. I mean, you should at least have one separate bank account. And if the like me, I'm doing well. Yeah, I don't know. If you can have one separate bank account if you have similar, like if the different businesses are pretty similar, and you want to lump them together so they're part of the same business, you can have them in the same bank account. I mean, yeah, that one, it's not like a rule necessarily. It's just like what's going to make it easiest for you to report it, how you need to report it. I mean, if they're really different activities, you probably would want separate accounts, separate income and expense, profit and loss statements. But yeah, ultimately it's all going to be added together anyway on your tax return, and the profit will be taxed.
Good to know. Pretty much that's the exact situation we're in now too, where we're creating Network Prep has its own bank account. So that's our prep center, if you don't know that, where we prep products for Amazon FBA sellers. So Network Prep has its own bank accounts, completely its own thing, treated like a separate company now. And then we also have like Side Hustle Network, kind of has different variations. So what I do for Mark is I'll put together like not a true P&L, but I'll put together, total expenses, total revenue made. And I break it down and I do the grouping. So I'll put like YouTube and affiliates, anything that's content related typically is going to be grouped together. Our reselling on Amazon is one, eBay is one. So I definitely try to separate those out a little bit. It's nice too to kind of, once you get into multiple streams of income, it's really nice to be able to look at a overhead shot and see, okay, these ones made really good profit, these ones did not. Maybe I should focus more on the good ones. And that's kind of what we had to do over the last several years. Like we cut out several of our services, our paid Facebook groups. We had to cut some of those out so we can focus on better ROI type of stuff. So ultimately it's up to you, of course, how you want to structure it. But I would definitely recommend separating things out, just like Mark was saying here.
Yeah, and just real quick on that, so for my Amazon business, I do have a separate bank account. I have a separate bookkeeping file. But for my CPA business, like within that, I have income from my course, my ebook, from taxes, bookkeeping, like just different activities. But I can break up, and I just have one bank account for all that stuff. But I can break all those out and label those differently within QuickBooks or within whatever bookkeeping system, I might be using. So it just depends.
So the never-ending debate, QuickBooks or GoDaddy bookkeeping? Do you have a preference?
I mean, I like QuickBooks. Like it was originally designed for accountants,
Mhm.
So, I mean, I think it can do so much. Like, I think it's awesome. But if you're not familiar with it, it can definitely be a learning curve. Some people get in there and they get overwhelmed.
That's where I'm at right now. I've been using GoDaddy bookkeeping. It was just very simple to use for like 5 years. Now I'm slowly like transitioning and categorizing and setting up all the different, like, okay, if a Walmart purchase comes in from this card, it's a business expense that goes to it's setting it up, I think, is the most difficult part.
Yeah. Quick question for you. So I get nervous enough doing my own, like prepping my own Amazon products. Like, do you ever worry you're going to like put 1,000 labels on the wrong item?
I mean, the worry's there. I'm not worried now because of my OCD and slowly training people. Like, it's ridiculous looking at how we've trained our team. We have a team of 6. I would not let them touch a laptop to run Inventory Lab, because we do the shipment from scratch for people, which a lot of prep centers, what they'll do is they'll tell you to make your batch. So you do all of your data entry. You set your buy cost, check in the ASIN, all that stuff. And then we come in as a prep center, print the labels, put them on the product, do the box contents. We take it off the plate for the client completely. So we actually create the batch on Inventory Lab. We input your buy cost. So there's a lot of room for error if we didn't train the team the way that we do. So I wouldn't let them touch Inventory Lab for like the first 3 months. It was me and Trista running Inventory Lab 100% of the time, and they were prepping. When I saw that they could look at 8 different types of products and prep them automatically in 8 different ways, depending on, TOS and all that, and they were good, they had no mess ups, that's when I started, and I was a hawk watching over them the second I let them start touching Inventory Lab with client stuff. Because if we input the wrong buy cost, we forget to hit 0 at the end, and all of a sudden their $10 buy cost now is $1 buy cost, and their repricer catches that and then sells it too cheap, that's on us, right? So I've been very OCD on the way that we train people. So I'm not nervous, maybe like 10%, but 90% confident. Human error happens. We've mislabeled a few things. Fortunately, nothing major has ever happened. But, I've even mislabeled a couple things, because you can have 2 freaking little beauty products that look the exact same on the packaging, except one tiny little color dot on the top tells the difference. So we've had very minor things happen like that. But for the most part, everything's been pretty smooth sailing. I think it just comes down to training slow, not trying to rush people too quickly, not trying to put them on Inventory Lab when they're not completely ready and comfortable. So yeah, not too worried about it.
Yeah. All right. I'll send you my stuff.
There we go. Mark's like, I'm sold. This is a good one. You just mentioned something I've never written off. I sell a lot of new and used clothing. I always wash the used clothing. So how do I claim that as an expense?
Yeah. I feel like I should research that one a little more. I mean, you could take it through the home office deduction as part of like utilities. Well, so here's the problem. Like say your office is 5% of your home. So in that case, it just applies that 5% across all of your utilities, your rent, your mortgage interest. It just takes that 5%. But what if for your water bill, say 50% of it is actually related to reselling? I think in that case, you can actually sort of break it out separately and take, the truer amount. I think that's right.
Yeah. The method my old CPA had me do for my massage therapy business was we had a personal laundry detergent jug and then a business one.
That's a good idea.
So the laundry detergent that was labeled business, we knew exactly how many of those bottles I used per year. So the more you can separate the personal and business stuff out, it sounds so dumb to say it out loud now, but we truly had 2 bottles of laundry detergent because we had the business one. So if it was a load of massage sheets, then that we knew that's what was going to be using. I guess, there might be a way, they have like a meter system that you can typically see on your online dashboard with whatever water company you have. I mean, there might be a way to actually like track that per load or something like that. I don't know. But yeah, little tiny deductions like that, they don't seem like much, but they'd add up throughout the entire year. Same thing with mileage. Some people are like, oh, my thrift store is like 2 miles down the road. It's like, yeah, but if you're going 2 miles there, 2 miles back, and then multiply that by how many days a week you go, multiply that by 52 weeks in the year, it adds up.
Yep.
Should I put regular work income separate to Amazon account?
Regular work income separate. So like W-2 income, I assume?
Yeah, I would assume that would be just regular W-2 income and Amazon going into the same account.
Yeah, I mean, if you're a sole proprietor, you could, because the IRS just considers your business to be the same as you individually, pretty much. So there's no like legal reason to do it, but just as far as your own bookkeeping, I think it's a lot better just to separate it out. Just get it like a separate personal account and run all your Amazon stuff through there as much as you can.
That's what we did when we were sole proprietor for the first several years. Just ran a separate personal account, and then GoDaddy bookkeeping just kept track of that. Plus, Inventory Lab is nice because we can pull reports and all kinds of stuff for that. This is a solid question because I did hear this. Rumor has it that my meals while sourcing will be deductible for 2021. Fact or fiction? So previously, correct me if I'm wrong, it's always been if it's a true business meal, taking coworker out, or like for me to buy lunch for our team here at the office, you can deduct 50% meals and entertainment, correct? And then the rumor was starting now, 2021, it's 100%. Is that true?
Yeah. So only certain types of meals were deductible.
What about donuts? Where's that fall?
Did you say donuts?
Yeah. Like if I buy donuts for the team and I just happen to consume one.
Yeah.
100% deductible?
I think so.
Oh, we're getting the fancy stuff this year.
Well, yeah. So most business expenses are just 100% deductible, but for meals, it's always been, well, for the most part, it's been 50%. But the only meals that are deductible are meals where you're having a business meeting or meals that are where you're traveling, like somewhere, usually out of town and overnight. So that means that, the sourcing trips locally, any meals you stop and have along the way, those are not deductible. So now the only thing that changed is that the meals that were allowed went from 50% to 100%. So now it's just the business meals and the travel meals that are 100% deductible. And that's for 2021 and 2022, unless they extend it.
So we have to take extended road trips more often for sourcing.
Maybe.
Travel across state lines.
Yeah.
This is a solid one. This is another reason why I love Inventory Lab. Can you explain how end of year inventory works? I use cash accounting. And I guess that's a good thing that we didn't even talk about the two different accounting methods. You want to cover that and then dive into kind of the end of year report that everyone sees floating around?
Yeah. This is probably one of the most complicated things, especially for somebody who's just starting out. I mean, it's not that complicated. It's just kind of weird. But I mean, and it's confusing because up until recently, the requirement was that you could use the cash method for everything except for inventory. So for inventory, what you had to do was only deduct your inventory when you sold them. But then in 2018, they sort of loosened the rules up a little bit, and they gave you the option to use the cash method, which means that you can deduct in the inventory when you purchase it. So that's a lot simpler because then you don't have to track everything, track when it sells, and add up the cost of everything that's sold. So if you're using the cash method, which is this simpler method, at the end of the year, there's really nothing you have to do. Like you don't have to put in a beginning inventory or an ending inventory. All you do is put in your purchases because that's the deduction that you get. So I think that's what she's asking.
And that's a system that we've stuck with this whole time so far, is just cash because it's simple. I sat down that first, it was like the second year of doing Amazon, and we started bringing in eBay, YouTube income started coming in. But for the inventory based stuff, I remember sitting down on my Google sheet, like trying to add up every little buy cost and do all the itemized breakdown. Like I got a headache. So I'm like, I'm just doing cash. What came in, what went out for the whole year. That's what's worked for us. Of course, consult with your CPA to see which method, because I'm sure there's pros and cons to both, of course. So it just depends on, I like to keep things as humanly simple as possible. So cash works out fine for us. Scott asks, is it better to file quarterly or annually for Amazon business?
That's a good question. So you don't, so you might be required to make quarterly estimated tax payments, but it's really just a payment. I mean, you can go on and pay it in like less than 5 minutes. It's not, there's no real filing associated with it. So the trick is just to kind of know how much you think you're going to owe for the entire year, and then just break that down into, divide by 4 and go on and pay that quarterly.
And this is something, as you're inputting into QuickBooks through the year, it can give you those estimates, correct?
Yeah. I mean, that's one of the benefits of doing your bookkeeping, because you can kind of see where you're at, and you can pay taxes based on that, on your profitability.
Or if you have a CPA, based on the previous year, they can give you estimated. So that works.
Exactly.
Can I simply convert my sole proprietor LLC to an S Corp when I avoid additional taxation?
Well, so you're either, you can be a sole proprietor, or you can be a single member LLC. So I'll assume he means single, or that they mean single member LLC. And then, you can take that and you can convert it or elect S Corp status. And S Corps do not have to pay self-employment tax. So if you're already at a certain level of profit, then that can potentially save you some significant dollars.
Like $15,000.
Yeah.
That's the exact scenario we had. We went from just basically sole proprietor, single member LLC. And I forgot what we did in 2018, but then 2019 came around. And we had a significant jump in our income because we went all in on this stuff. We stopped doing multiple side hustles a little bit and started focusing heavily on a few of the good ones, like Amazon. And the second that jump happened is when Mark had transitioned us to S Corp, and that not having to pay that self-employment tax is what saved our butts. So that was great. Yeah,
but I should say that, I mean, you don't want to do that on the first day or from the beginning, because you have to pay yourself a reasonable wage through payroll. So you're going to probably paying for a payroll service. You'll have to pay for a second separate business tax return. So you're at least going to be paying an additional $1,500, $2,000. So you want to make sure that the savings that you are realizing is more than enough to outweigh those additional costs.
Solid on that one. Any other common questions that you typically get? I think the big one is obviously, like, I knew someone was going to ask it too, about sales tax, nexus. That's definitely the biggest. There's so much related, in the tax world with reselling. There's so much gray area. And this is, I hate doing it. I know Mark doesn't like doing it, but a lot of answers to questions are, it depends. Because it does. There's so many gray areas. So it depends who you talk to. Your CPA, some of them will tell you, yes, you can do this. Other ones will say, no, you cannot. Just depends on how they're trained. So Mark, what's your take on nexus, paying sales tax, applying for different states? I know TaxJar, if I remember right, TaxJar is a really popular service for that.
Yeah. Although, I mean, in most states now, they have laws that require the platforms to take care of the sales tax for you. Mm-hmm. So most of us actually don't even have to worry about sales tax anymore. There's only like a few states. Florida is the most notable one that still might have to worry about collecting sales tax, but usually just on sales to customers within their own state. So yeah, that's the good news. For most of us, we don't have to worry about it anymore.
Because that was always the debate with Nexus was, well, I'm not going to pay if it's not being shipped like locally. I'm going to cover what's shipped locally, right? Because that's where my warehouse is. And then the debate on the Amazon side was, well, technically you are storing inventory in Amazon warehouses in these states, so you should be registered with that state. That was always the debate back and forth.
Yeah. So, I mean, you're in Oregon.
I got it easy up here. I got no sales tax. I didn't even have to get a reseller certificate until my first wholesale account was like, hey, we need a resale cert. I'm like, I'm in Oregon. I'm the spoiled child up here with no sales tax.
That's yeah. Well, even if let's say you did have sales tax, even if you sold to somebody in Nevada, where you had a what do you call it, a distribution warehouse. So that might technically give you Nexus in Nevada, but Nevada has marketplace facilitator laws, so Amazon will just have to collect that sales tax for you.
Yeah. If you guys didn't know, eBay started doing that. I think it was early last year. They started transitioning a lot of these states. And so eBay's doing the same thing where they're collecting a lot of the sales tax on our behalf. That's why in the last year, you would have seen if you sold something for $10, you're going to see an extra how much the actual customer paid. And that's typically going to be the sales tax add-on that they're collecting for you. So that was super nice to see.
Yeah.
Here we go. Oregon, Florida, Montana. Amazon does not collect sales tax in some of these states. New Hampshire and Delaware as well. We have people, like I've had some friends that will literally, like e-commerce friends, they'll fly into Oregon just to go source Nike, like hundreds of pairs of Nike, because there's no sales tax. So they're saving hundreds of dollars by coming here and purchasing, and then they'll ship them into FBA from here and then leave and go back home. Same thing with Washington. We have Washington people just north of us, like an hour north. Washington people come down here to source our stores. So it's all sales tax free. They ship it and then they go back home. We're spoiled up here.
Yeah. There's a few up a little that I think we passed. So
I missed some.
So one from Scott, he says, if your wife is your coworker.
There it is. If your wife is a coworker and you both talk business for more than 50% of the dine, can that meal be written off for taxes?
So that might be considered an aggressive position. I've looked into that one. I don't know if there's anything official about that now. I have read some CPAs who say, no, it's not. But I mean, I might tend to say that it's fine.
Yeah.
Especially if she's a half owner and you're actually talking business. And if you're out at a restaurant, I would say yes. I'm going to go back and research that now. But
I think there's a clear line of, okay, we're going on date night. You go to a movie, if your movie theaters are still open, not in Oregon. I haven't seen a movie in 6 months. But yeah, it's like if you're going out for a regular date night, see a movie, you talk a little bit of business, I don't think that would count. But something like what Tristan and I just did at the end of each year, we sit down for like 4 hours. We sit down and go out, and that's our end of year review. So that's like a true diehard business meeting over dinner and coffee. So that kind of stuff obviously would fall into that category. I think this is one of those ones where Mark's going to say it depends. Depends who you talk to. It's kind of a gray area.
I mean, in some things are a stretch. This one, I'd probably say, yeah, sure.
Yeah. Yeah. If it's more than 50%, I know Tristan and I obviously, like, just being husband and wife and true business partners, like 90% of the conversation when we go out for dinner is about business. 10% is about the kids. That's kind of the real life of it.
Right.
Scroll up, make sure I didn't miss any up here. If we missed any questions, I do apologize. You can just drop those in the chat below again. We'll get to those. I did see a super chat. Charlotte, what's up? Constant companion, $5. I will definitely put that in Trista's Starbucks fund. Much appreciated. So to be clear, I'm in Ohio, and I only have to collect sales tax if I sell to someone in Ohio.
That would only be true if Ohio did not have marketplace facilitator laws, which they do, which require the platforms to do that for you. So you don't have to worry about it.
You're good, Marcy. That was told by a licensed CPA, so
it has to be true.
It is true, and it's on the internet. Double true. What percentage of our profits can we expect to pay in taxes? That is an excellent question.
Yeah, I mean, you'll at least have self-employment tax on the profit, so that's 15% right there, and then you just have to add on whatever amount of income tax you have. So that just depends on whatever bracket you're in. That could be another 5, 10, or 15%. So overall, you're probably looking at somewhere between 20 and 30%.
Yep. I'm not a CPA by any means, but when people ask me how much should I set aside, I usually say 25% just as a cushion. Just set it in a different bank account if you want to. Put it somewhere where you're not going to be spending, especially when we're all resellers. If I see thousands of dollars sitting in an account, I'm probably going to want to spend that. Like, don't. Make sure that you're paying those things. But yeah, 25% is a pretty good cushion most people go with. And you should be looking into like your brackets on different, especially with income tax. Like here in Oregon, we don't have sales tax. Boy, do they make up for an income tax. Mark has seen this firsthand. We saw a very painful jump in our brackets from going from like 40,000 a year to 6 figures a year profit. That was painful. That's when I'm like, okay, S Corp, let's set this thing up. So we're moving down to Texas. So we're starting to look at Texas. I'm like, well, Texas doesn't have income tax. So I'm curious to see what our tax status is going to look like once we make that transition. And I guess this is a really good question since I have you on here live anyways. If I move to Texas and I've got our S Corp LLC based out of Oregon, am I still taxed based out of the Oregon? Or since we're physically located down in Texas, do I need to set it all up completely new down there? How's that work?
If you set something up in Texas?
Yeah, like we're moving down there. So everything's based out of Oregon right now, our LLC or S Corp. So do I need to just set that up in Texas when we move down there? Am I still taxed based on the Oregon setup? How's that?
Wait,
never even thought about that till just now.
You're moving to Texas?
Yes.
I didn't know that.
You didn't know that? It's been like kind of low key, but we've been kind of like hinting and dropping. Yeah, we're going to San Antonio.
Oh, get out of here. No, I missed that. Yeah. So here's a good point to make. Like, yeah, you'll be in Texas. So since you'll be like operating and doing the business in Texas, Texas will technically want you to be registered there. And then instead of being registered in Texas and Oregon,
is there a way to like convert the Oregon one over? I'm assuming
maybe.
Okay.
So some states do it, some states don't. It's called domestication. Like you can domesticate your LLC. That basically just means transfer it so you can use the same EIN and everything.
Gotcha.
So yeah, I'll have to look at that.
Yeah. And then the split part of that too, since you didn't know we were moving to Texas, we're going to open a second location for the prep center down there. So then it becomes the question of Network Prep is its own LLC, which will have an Oregon and a Texas location. Do we need to, is there some type of form or something that says, hey, we have it in both locations under the same EIN? Or how's that whole split system work?
Yeah, well,
it's stuff I've never even thought about before till just now. So you guys get to hear behind the scenes, little consulting going on.
Yeah, I mean, if you're staying there, so if you'll be in Oregon and Texas, you'll probably just register the Oregon LLC in Texas also. But yeah, we'll look at that one.
No worries. You can send me an invoice and I'll let you handle that one. This is why you need to have a professional, guys, because if I'm trying to handle this myself, I set up when Side Hustle Network LLC became a thing. I tried to do this myself, which you can, but I wasn't paying attention, so I didn't realize the difference between the member and the agent. So technically on paper, Trista owned everything, and I was just an agent. I didn't realize the member is the one who is basically the owner. So we got that all figured out, though. So get a professional to consult with on this stuff. It definitely will save you. Hey, there we go. Do you buy Pepto in bulk around April 15th?
No, but what I did, what I did last year, I was buying Mountain Dew a little too much. So I posted a few weeks ago, I was drinking my last Mountain Dew until April 15th. So I'm all water.
Do you do a straight up like celebratory meal after April 15th?
I should.
I'll say I April 16th. I'd like, that's cheat day. I'm celebrating somehow.
Yeah. Yeah, definitely. I'll do that.
Thanks. I don't sell on Marketplace. I sell straight through PayPal. I should have been more clear. This was referring to the Ohio question here. So that's just a direct sale, not on a marketplace.
Yeah. So, I mean, that I think that applies to like Facebook sales, Instagram sales, platforms that aren't really set up to collect sales tax. Like you can't even set it up to collect sales tax. Yeah. So in that case, I guess technically you'd be on the hook for sales tax for collecting it and then remitting it to Ohio on your Ohio sales.
Good to know. I didn't even think about that. Yeah, a direct purchase.
Same thing with Shopify.
What's up, Adrian? And Mark, how do you provide funds to your business from your personal account to purchase more inventory specifically for an LLC? That's actually a great topic too, is I had the hardest time understanding owner's draw, like the basics of, I have my business, how do I pay myself? Like logistics, what's the proper way to transfer money from accounts and note it? And then this is another good side part of that too, which is if I personally give money to my business, is that considered? I know there's a way to do it as a loan. So you want to cover the basics of how that works?
Yeah. So provide funds to your business. I mean, it's basically just a bank transfer, transfer money online from your personal account to your business account or business to personal. And then the key is just making sure you classify it correctly. So if you're contributing funds, it's like an owner's contribution or an equity contribution. If you're taking money out, it's just an equity distribution. And those are not deductions. That's not income to the business. That's not a deduction for the business. Those are just increasing and decreasing your investment basically in the business. I think that answers both parts of that question. Like if you're going to purchase more inventory, you can just contribute $1,000. So your cash goes up and your equity goes up. And then when the business buys the inventory, just the accounting.
Perfect. On expense reports that we keep, do we have to separate for each platform that we sell on?
I don't think so. I mean, it's just that's personal preference. Like I would kind of want to see how my profitability varies from platform to platform, but it's all part of the same business, in my opinion.
So to the IRS, if it's just all reselling, they probably don't even care the breakdown. They just want totals. So personal preference, like I'm the same way where I want to see, Amazon, eBay, local, I want to see a breakdown. And like I mentioned earlier, it's nice to, at the end of the year, kind of step back and see the big picture and see like, wow, I kind of sucked at eBay. Let me focus on that a little bit more, get that up so you can kind of see bigger picture stuff.
Or drop it.
Yeah, that's the same thing we had to do. We had to, halfway through the year, we dropped a bunch of stuff.
Sometimes people are, sticking with businesses thinking they're making money when in reality they're not, and maybe they should drop them.
Yep, absolutely. I don't know why I just randomly thought of this. I saw someone say the word inventory and it made me think inventory lab. I forgot to mention earlier, if you're not doing a cash-based system, if you're doing accrual, this is where you're deducting when it sells. In inventory lab, you can run at any time. You don't have to do it on the 31st of December. You can run an inventory evaluation report based on December 31st, and it will tell you how much inventory you had in stock, total buy cost, all that stuff. So that's a good report to remember for the inventory lab side. Inventory lab, even if you don't ship with it, is worth it just to have those breakdowns of the reports. So it's a nice clean printout, and boom, here you go. Give it to your CPA.
Yeah.
I saw a question coming on the Facebook side. It looks like that was already covered. All right, cool. Any last minute questions for you guys? Mark, do you have any points that we missed out on? There's a lot of stuff involved with the tax side.
Yeah, let me see. Yeah, I mean, I think we've hit on a lot of the big ones. I mean, I think one of the biggest things is just, I think, separating that business activity from personal by getting a separate bank account. Ideally, you layer on some type of bookkeeping system, and that'll set you up not only to have your numbers for when it comes tax time, but also so you can be aware of what your profitability is, at least on a monthly basis, which I think is really important.
Yeah, for sure. Especially in reselling, it's so easy just to keep buying inventory and keep selling and keep buying, keep selling. But if you're not actually running these types of reports and doing your accounting every month, I mean, I remember times doing my accounting after 6 months. I'm like, crap, I should finally catch up with this. I do my basic accounting and realize we only made 10 grand on this platform. What are we doing? Right? It's easy to spend a lot of money and not see much back. So increasing our turnover rate on those products helps out. And we didn't know this until we started doing our accounting more often and started seeing the numbers. Really helps out. If you show a business loss, can you still take the home office deduction?
That's a good question. And so no, you have to have profit that you can take the home office deduction against. If you have a loss, you can't take it. But I think if you use the regular method, because there are two methods you can use. If you use one of the methods, then it can actually, you can't take it in that year, but it can carry forward to use in the next year.
Ooh, follow up to Marcy. Facebook is now charging sales tax too.
Oh,
there you go.
How about that?
I learned something new today.
I had said it was just a matter of time.
And then, which CPA review course did you take?
What? Like for the CPA exam? So my company paid for Becker CPA. I think they were the biggest back then. They still might be.
How long have you been doing this, by the way?
Doing reseller stuff just the past 5 years or so, but depends what you mean by this. I mean, I've been a CPA for just over 10 years. But
and then before, so did you get into the e-commerce side of the CPA gig like 5 years ago when you started, or what'd you do in the beginning chunk? Was it just more like brick and mortar, just personal taxes?
Yeah, like in the beginning, I was just doing like a couple friends, a couple people my mom knew, like the very first year. And then it just kind of doubled every year after that. And along the way, started picking up, some eBay clients and kind of discovering that world, started selling on Amazon and just kind of.
You realize no one talks about taxes in e-commerce. I should probably get in here and fix this.
Yeah, I started getting all the same questions and I'm like, man, this is an opportunity right here.
Awesome. Now you got a niche for it. I love it. And then we had a great segue question here. Mark, I want to hire you as my CPA. How do I get started?
Yeah, just shoot me an email. Just Mark@NotYourDadCPA, or through Instagram, whatever.
And I'll be sure to link up Mark's information, Instagram, all that below. And if you guys like, this is a small chunk, and we had a lot of people in here. Thank you. Great info. Thanks. This is a tiny chunk of the information that Mark's put together. He does have a reseller tax academy. So if you want clean, laid out, full on, how many videos is this thing up to now? Inside this whole academy you put together?
I don't know. There's 9 separate modules. Each one has a handful of lessons. It's not like too long or complicated. I feel like it's laid out pretty clearly.
Mm-hmm.
But it's it's all about helping you optimize your tax situation. Give you the confidence, get rid of the anxiety, and just help you feel a lot better about your books and what's going on.
Mm. Yeah, and I like to tell people too, even if you plan on just 100% outsourcing all of this to a CPA, it still is hugely beneficial if you understand what's going on in your business. So I went through, took the course, went through the videos, and all that good stuff. So Mark's going to be offering that for the next 3 days up until 23rd, 22nd. Where are we at today? Looks like Friday. Is going to be offering $80 off, correct?
It's $100 off for the next couple days, and then it'll still be discounted after that, but kind of increases by tiers up through next week.
Awesome. Yeah. So if you guys want to get in and get the academy, very well laid out. I actually need to pick your brain on laying something out like that for myself. Very well laid out, clean videos. Like you said, not too long, not too short, just the right amount of information you need to fully understand your business and help you structure how you want to run it. So you can find that link in the description below. Mark, you want to pinpoint any other benefits, anything like that about the academy?
Yeah, I mean, I think it's not about like doing your own taxes. It's more about like doing the things that you should be doing day to day from the beginning of the year that are going to set you up for the most, the optimized savings, that kind of thing. Because there's only so much that you can do, or that your tax preparer can do at the end of the year, because all the damage has already been done. There's certain ways to set up your business, or certain deductions to be aware of, or certain things to track. And when you compound those things year over year, I mean, that's going to save you thousands and thousands of dollars.
Absolutely. So I just dropped the link in the description on the live chat. It's also going to be in the description of the recorded video as well. If you guys are inside of one of the Facebook groups, you can find this information in the group files or the pinned post as well. We have a little, different partner links up there, which Mark is a part of. So Mark, thank you for your time. I know this is definitely a little bit coming up on, are you an hour ahead, 2 hours ahead?
Just 1 hour.
Oh, okay. For some reason, I thought you were 2 hours ahead. So it's only 7:30. It's not too late. Used to be. So if you guys have any questions for Mark specifically, please don't come to me with your tax questions. I will just refer you over to Mark. So you can definitely hit him up on it. I think Instagram is probably your most popular method of communicating with people, if not through email. So I'll have all of his info in the links below. And we'll see you guys. I'll be live again tomorrow, Wednesday night, for a regular show. And Trista's actually in Texas right now. She got there today. So she won't be with us tomorrow. So you're stuck with me all by myself. So Mark, have an awesome night. Great rest of your weekend. And we'll chat soon.
See ya.
All right. Bye, guys.